And our star attraction today, Anas Alhajji. Anas,
Good
welcome
morning. Good
back.
morning.
Where are you? You here? Are you here in this hemisphere or the other one?
Yeah, I am in Texas.
Okay. All right. So great to have you. Were you going to share your screen at all to show things?
Not at all. I have no slides.
Okay.
I just want to
Okay.
talk
Then
today.
let me do it. Okay. So
Okay, thank you.
wow, so much has happened. I mean, last time you and I talked, it was pre-invasion, and I think you said he might be looking at Kazakhstan. Well, he went
Correct.
right where his troops were pointed towards, and we had that big move to 130. But I know you want to concentrate on a couple of things here, and I did write them down. Initially, you want to talk about um, high oil prices cause recession, and I've heard people say it. One guy interviewed said, anytime the oil prices doubled, there was usually a recession within a year. So let's hear the other side of it.
Well, the other side is everything we know, even in graduate schools, about the role of oil prices in recessions or the economy. I'm talking about economic growth, sorry, not the economy, is wrong.
Okay.
High oil prices on their own do not cause inflation. High oil prices on their own do not cause a recession. We heard the saying that every recession in the United States was preceded by a period of high oil prices, etc. Well, that was made up.
Who made it up?
No, that was made up by various people over the last 50 years.
Okay.
And the reason why, because if you take all those statements, even the guy you interviewed about doubling oil prices,
yeah,
and take that and put any of the macro variables or some of them, and the statement will be true. So saying that every time interest rate and taxes went up and the dollar went up, we have a recession. It's true.
Okay.
So the only way to understand this relationship is this. As oil prices increase, there is an impact on people's pocket. No one is going to question that. But what happened historically is we have a reaction from the government and a reaction from the Fed. And if that reaction is the wrong reaction, we end up with inflation or we end up with a recession or both. If the reaction of the government and the Fed is correct, we have no problem. How I can prove this point? Well, if we go over all those variables in the last 50, 60 years, we can see the data, and the data supports what I just said. If you look at oil prices, for example, and all those macro variables between 2002 and 2008, oil prices continue to go up 30, 40, 50, 60, 80, 100, 120, 147. And we had no problem, even in countries like China and India. Economic growth was going through the roof. Even in Europe, economic growth was going through the roof. So why high oil prices during that period did not affect economic growth? Why it did not cause recession? Why it did not cause inflation? Well, because
the Fed stopped tightening.
Because that was the only period in history where we've seen a major increase in government expenditures, increase in military expenditures, increase in incomes. At the same time, we've seen a decrease in the dollar, decrease in interest rate, and a decrease in taxes. So it's really the Fed policy. The end is the Fed policy and the government policy. It's fiscal policy and monetary policy that is causing the recessions, while people think what the Big Bang.
It's not oil prices in itself. It's central banks' reaction to higher oil prices
and government policy. So it's fiscal policy and monetary policy. So to conclude this, if you look at the current situation, we have increase in interest rates.
Yes.
and we have increase
Stronger
in
dollar.
oil prices, and we have the dollar near record high or at record high. This is a disaster. This is a recession. The only thing that we got to point at, and this is more kind of a technical / academic statement that I'm going to make, is we have to look at the direction, which means that increase or decrease, and at the same time we have to look at the levels. So the only hole in the argument that I'm talking about right now is that interest rate is still low as a level, but in terms of direction, it is going against what should have been to correct for or mitigate the impact of high oil prices. So we have
Well,
a
to me, it
threshold.
looks like, let me just pose this to you. If yields have peaked, and it looks like we have that happening in the 10-year, very big reversal. Not saying they're going to crash back to 1%, but they could pull back to 250, 220. What kind of effect is that going to have on, say, for example, we're close to the end, even though the Fed's going to be hiking, that most of it's already in the market. Then what happens? Do we avoid a recession?
Well, the issue is not only the federal fund rates and what comes out of the Fed itself. It is really what the interest rate in the market.
Okay. Well,
because that's where people are going to operate.
These
So
are
if-
the interest rates in the market. It's a 10-year yield. So this was a big interest rate increase, and it went, just like, oil, it was a monster move in a short period of time, and it may have peaked for a while.
Okay.
So will this make recession less likely?
All right. Let me just make a little modification to that, because that's really what sometimes, and we've seen this in historically sometimes, where the interest rate charged by banks is different from those key interest rates.
Okay.
Because if I am an oil company, I want to borrow money, I'm not going to borrow at this rate. I'm going to borrow at a higher rate.
Right.
And sometimes there is a gap in between for various reasons, one risk among them, depending on the sector and everything else, etc. So the issue is, when we look at the level, we are still below the level where we have kind of bad news. So that's the only hole in the argument that I have. Otherwise, directionally speaking, we are already in a recession, or we are heading for a recession based on that argument.
Okay. You wanted me to ask about the effect of the dollar on oil prices. We have a dollar making new highs. Oil prices have been moving sideways for a few months now, at least a month since a peak.
Okay.
Are we going to revisit these highs in us, you think, or take them out? And can you think of one thing? You see this major support area here at 94 keeps holding. Can you think of anything that would take it back under 94 that you're seeing on the horizon, with all the, different players and what's happening in Ukraine, and what's happening with, maybe Iranian oil? Can you come up with any bearish argument in the oil?
Yes, I can, and I will answer this in a minute, because I just want to refer to this. Since we don't have enough time to explain the relationship between the dollar and oil prices, I would like to refer the listeners to my Twitter account. I have a pinned tweet to a 2-hour space, where I explain all those relationships, and I talk about the currency, including the Russians charging ruble for gas. So I discussed that. So it is the pinned, it's right there, the pinned tweet, the first one.
Right here, this one. It's an interview.
Yes, people can listen to that. It has a lot of details on the relationship between the dollar and oil prices. The bottom line on this is that the dollar is up against all currencies, and oil is priced in dollar. Any way you look at it, oil is priced in dollar. And
Right.
even those who say, well, look, we have an exchange in Shanghai where
Right.
the yuan is used to price oil. Well,
To
that
buy it.
is a mirror image of what happens in the dollar trading in Dubai. So no matter what, oil is priced in dollar. The problem is, as the dollar goes up, the cost of importing oil for most of the countries in the world
Goes up.
goes up.
Goes up. Yeah.
So if the dollar goes up 10% against their currency, while oil prices in dollars are staying the same, their cost goes up by 10%.
Right.
And if you look at the price of oil in several areas around the world today, it is at record high because of the dollar.
Okay.
So although in dollar it's not at record high, it is in their currencies at record high. And that will have tremendous impact on, because you asked me about a bearish case, that will have tremendous impact on oil demand on one side. And the other side is, if we end up with a recession, and many of the people who participated in our spaces in recent days heard this from me, so I'm repeating things that a lot of people heard me saying before. If we end up with a recession, then oil demand year over year will decline by up to 400,000 barrels a day. So oil demand,
that's a big number.
Global oil demand in 2020, average oil demand in 2022 will be lower than oil demand in 2021 by up to 400,000 barrels a day. Now, some people might argue, well, look, 400,000 is nothing relative to a demand of 100 million. Well, we are talking about a decline here. That means all the growth that we were expecting this year from now on is gone. And therefore, the decline between what was expected and the actual number is over 2 million barrels a day.
Okay, because we pulled all that demand forward.
Correct. So what's going to happen is, that's a bearish case where oil will go below 94. And based on my view, if oil prices keep declining to below 60, and I'm talking about Brent, then OPEC Plus will start cutting production again.
Okay, so there's your floor. Okay, interesting. I was going to ask you, and something you wanted to cover is, because of Ukraine, Europe wants to shift their suppliers of natural gas to us. And, if you were an arbitrage guy, I mean, for a while we're trading at 4 and Europe's at 20 on nat gas, right? So you wanted me to ask if this was a good policy for the US. It will be for the natural gas companies. I don't believe it will be for the consumer, because we'll close the gap between prices in Europe and prices here, which is still, even at $7, quite a distance to what Europe's paying.
I mean, you touched on a very important point, because what Europe did, and I think Europe shot itself in the foot in what they've done so far in their reaction to the Ukraine war. All they did is they shifted their dependence from Russia to the US. They've done nothing within Europe.
For security, right?
Okay, that's a big problem. Why? Because Russian gas exports used to come to Europe via pipelines and some LNG, and no disruption. The only disruption they had historically was because of the war in Georgia, and because Ukraine decided to tap into the European supplies when the Russians stopped supplying Ukraine with gas years ago. Beside that, the Russian gas was flowing to Europe through long-term contracts at relatively low prices, and everything is fine. So from energy security point of view, the supplies were secured. Now they shifted to LNG. What that means is immediately the cost went up, and probably forever, because the cost of pipeline of gas pipe or pipe gas from Russia is way lower than LNG. So
Right.
first thing is increase in cost. The second thing is they moved from something that was steady throughout the year to something that can change seasonally. Why? Because all the US LNG exports is from the Gulf of Mexico, and we are coming into the hurricane season. We know what happened during the hurricane season. So where Europe is going to go for gas if we have a major hurricane like Katrina or Rita or Ivan? So
Back
that's
to
a big
Russia.
problem. The other one is, and mark my words for this, we are coming into an election right now, and if gas prices remain above $7, and if they go, especially if they go above $9, we are going to see senators and congressmen calling on the Biden administration to reduce or halt LNG exports to Europe.
Yeah. Huh. Okay.
And they may not succeed, but there will be a lot of pressure on those companies to reduce their exports, because the American consumer is paying very high price, and the American consumer is already angry because they are paying for high gasoline prices and now for high gas, and electricity prices are going up. And
Okay,
the price of everything.
One of our attendees has a question for you.
Sure.
Ingmar asks, Ukraine stopped gas transit to Western Europe in Luhansk region today. Can you please comment?
This is, we don't know what the exact story here, because they declared force majeure, which means that there is some technical issues, and they wanted the Russians to divert the shipments to another pipeline, which is an entry pipeline. And the Russians said, well, based on their information, there is nothing there. So there is no reason for it. And therefore, they have to stop exports of gas anyway. So in terms of knowing the story and the right story, until now, we don't know what the right story is. But it was very clear from day one, from the last week of February, that Europe got stuck. Putin, when it comes to energy supplies, he holds all the tickets.
Yeah.
And at the end, it is who is going to scream first. Yes, Russia and Putin are being hurt in various ways, but the issue is who is going to scream first. Is Europe is going to scream first, or Putin? And if you just look at the situation, it is very clear that Europe is going to scream first. Yes, the Russians and Putin are suffering, but can Europe, especially when we talk about democracies here, can Europe handle the shortages of energy supplies, whether gas or electricity? One of the problems, absolutely.
Have you ever seen an oil shock and a food shock simultaneously?
We have one in the 70s, but it's not as bad as this one.
No, this one's on steroids.
Absolutely. And one of the problems we are facing right now.
We had an Arab Spring last time we had this food problem.
Well, it's here is the Arab Spring was a small exercise for what we are going to see. And the reason why, because in the Arab Spring, there were other issues with it too. Okay. It wasn't only the food prices. Here, we are going to see people who are literally hungry, have not eaten in 2 days.
Yeah.
That was not the case in the Arab Spring. The Arab Spring, you've seen people with iPhones basically demonstrating in the street. Here we are talking about
they didn't like the high prices, but now they can't get it at any price.
Correct. So the problem is really worse. The other problem is we already passed the planting season in Ukraine.
Yeah.
And as you know, Ukraine is a major supplier of various foodstuff to various.
And the U.S. planting season is 50% behind last year.
Absolutely. And if we end up with a drought this summer in places like California and Brazil,
oh yeah,
I think we are heading for a major crisis.
Yeah. Most
And
wars are fought over over water resources historically, right?
yes, but we have another problem, which is we have small, poor, oil-producing countries. If they end up with political turmoil, then we are going to lose their oil. We cannot afford to lose one single barrel today. And imagine if we lose 500,000.
Okay. So when was that news blurb about Iran being a couple weeks away from having a nuclear weapon? Was that fake news?
I don't know much about it, but you know, we've been hearing from the Iranians for the last 30 years and they never delivered. So we'll see.
Okay. It seems like things are heating up there as well in the Middle East. So
well, for Iran, at least, I mean, and it's unfortunate that the Western media is not covering this in details. We have demonstrations in Iran almost on a daily basis, especially in the Arab province, which is along the Gulf. But the media coverage is very weak.
Yeah. All right. So word of advice to people that are oil aficionados and they trade it. What would you do? How would you advise your clientele about price and opportunities in the oil market for, say, till we talk again?
For midterm and long term, I am very bullish. For short term, we have to be extremely careful because it can go both ways.
Yeah.
But I would like to mention a final point, which is extremely important, that do not buy into the political arguments. And the reason why, because if you look at disruptions in oil supplies in the last 40 years, there are more disruptions in there are more disruptions in democratic countries than countries with dictatorship. So you might make the argument, I'm going to invest in this country because it's politically stable. Well, guess what? What if you have labor strike? What if you have a fire? What if you have a hurricane? What if you have a technical problem? So just be careful.
Okay. Do you think that would relate for mining too? Because I hear a lot of that in mining. You know, say they have mines in Canada and they have mines in Africa. That people feel there's more of a tendency to nationalize in Africa than Canada. But Canada during that trucker strike actually went in and froze assets. So
absolutely, absolutely. That's exactly the point I made. Yes.
Is that it? Is that the metaphor? You know, because you think it's a stable country, but a dictator that has order in this country, is more of a reliable supplier.
In fact, I usually use this example. For over 30 years, Kadahffi of Libya provided Europe with 1.6 million barrels a day every single day for over 30 years. No one dare even to do anything. The Libyan oil production did not increase, because if we have more freedom, it would have increased. But we never went below that level and never been disrupted. So under dictatorship, and of course, I don't want people to understand that I'm supporting the dictatorship here.
Kadahffi,
I'm just making the point that be careful with the political arguments for investment.
It's good to be king, if just for a while. It's a Tom Petty song. Anyway, thank you, Anas. I always have a great time talking to you. And
you're welcome. May I have just one comment here? People who follow me recently, please, I do tweet in Arabic, and Twitter has a translate function at the bottom of the tweet. So if you just push that translate, you can get it in English. And I tweet a lot of valuable information in Arabic. So don't ignore my account just because I am tweeting in Arabic. Take advantage of the translate function in Twitter.
Yeah, he gives all the good stuff to his brothers. And so they get all the inside scoop. So anyway, Anas, either language, follow him. And thanks for educating our community, and inshallah, buddy.
Inshallah. Thank you very much. And thank you.
All right. And is this a new book you have?
Which one? No,
Oh,
no,
this is
that's
to book you, to book you.
to book me for speaking engagements.
Okay, and that you're definitely a pro. So thanks again for giving us some ideas and things to consider. It's almost like, you know, the oil world is kind of like espionage, isn't it? Very interesting world.
I never regretted being in it, and there is never a dull moment.
Yeah, and really have the spotlight. And whoever thought that agricultural commentators would have the spotlight to talk about corn and wheat and beans. So we have a lot of new stars. It's a different show than it was 10 years ago, isn't it?
Absolutely. I used to have a friend, I don't know where he is right now, but he got his PhD from OSU, that Oklahoma State, in peanuts.
Yeah.
In the peanuts market. And I was, you know, there was a period of time where I was making fun of him, and all of a sudden he's a star.
Anything that grows, central banks can't do and can't print them. So thank you very much, Anas. Good hunting, and I'll get a hold of you on Twitter later to line things up for this summer.
Sure. Talk to you later.
All right.
Bye.
Everyone, that's a wrap. You could join the ForexAnalytix team in 15 minutes for the morning edge. Remember, don't just count your oil barrels or your natural gas or even the propane on your barbecue. You need to count your blessings. And I'll see everyone tomorrow. Yeah, that's the correct handle. Thank you very much, Alexander. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.